Hello, this is Jordan. This video is being recorded on the early afternoon of Monday, March 20th, 2023. Thank you so much for joining me today. And in this video, I'm going to discuss the weekly outlook for gold and silver and the mining stocks. So starting off here, we have a weekly candle chart, gold at the top, silver at the bottom, number of moving averages for gold. The reason I have the weekly chart here, even though we're only one day into the week, is because you see that red line at about 1982, 1983. That is the real significant resistance from a weekly standpoint. I can't recall. I think it's 19, I want to say 83 or 84. Basically, you get a close above that level, a weekly close above that level. That's the second highest weekly close ever. Now, the monthly all-time high, I think it's around 2,000, but coming up shortly, within 2 weeks, we get the close of the month, the close of the quarter. 1953 is a very significant level that I'm following for that close. But again, weekly close 1983, 1984. If the market closes above that any week, that's going to be the second highest weekly close ever. So that's really the resistance that gold has to deal with here. I mean, from the 1950 to 1980 zone. And, even though gold has, it's been trading above it just for the last 2 days or, 24, 30 hours of trading, there's still resistance in that area. And so I think that's something gold has to contend with here in the very short term. Does it retest 1950 and then try and make a run to 2000? Or does it immediately go to 2000, retest the high, then come back down to 1950? I don't know. I'm just thinking of scenarios. But just understand that 1950 to 1980 area, or 1985, that's really the last significant resistance that we're looking at with respect to the weekly chart. And so, again, the close of the month will be really interesting, but that's what we're looking at for gold. Another thing that's really important is one of the moving averages there. Well, first of all, I probably did a video a month or two back noting, in these bull moves, gold doesn't correct that much at the beginning. And so that correction in February, that was about 8%, 8.5%. And so I noted that and noted the significance of gold really needs to hold 1,800. If a bull market move started last fall, gold really needs to hold 1,800. And even though I wasn't expecting it to at the time, it did hold 1,800. And, I could do another video on this, but there's just numerous support points that pointed to 1,800. I mean, 50% retracement of the, rebound, the little rebound there from the October low. Also, moving averages. I talked about this multiple times. All the moving average support there coming in around 1,800. And the blue arrow there, it's right around, the equivalent to the 40-month moving average. You can watch my videos. I mean, I've said this 100 times. Go back the last 40 or 50 years. The 40-month moving average is really significant for gold. In fact, if you look at 2019, the correction before the Fed shifted policy and cut rates, that little bottom there was at a rising 40-month moving average. So even though, gold came within, I don't know, $15 or 1% of it. If you're looking at these historic charts, it's going to look like it bounced off it, even though, again, it was, 1% within it. But, nevertheless, close enough. And so just that's a really significant support level there. And it, gold bounced above it. Then we got the banking stuff that pushed gold higher. So that's where we are for gold, in really good shape. I think at some point in the next couple months, this market is primed for a big breakout. And, with respect to silver lagging, I think silver and the mining stocks, my general thinking is until you see gold clear 2,000, 2050, 2,100, until that happens, silver and the mining stocks are probably going to lead. They're probably going to lag. So if we get, if we get a whiff of deflation at some point, gold hasn't broken out, gold corrects to 1,850 or whatever, in that scenario, you're going to see silver and the mining stocks struggle and sell off. So, it's really interesting because if gold is able in the next month or so to, break away from resistance, then you're going to see a lot of capital come into silver and the gold stocks. So, interesting juncture. So again, silver and the gold stocks, that's going to depend on, what happens with gold breaking through this major resistance. But looking at silver just by itself, 22 is the important resistance level. Silver closed above that last week. So the next levels we're looking at just above 24, that 24.50 and then 26. So silver has a lot of resistance. I mean, even if you're looking at monthly and quarterly charts, 27, 28, really, really significant resistance there. So again, you're going to need to see gold clear 2100 and really run there, I think, for silver to break through that $26 to $28 barrier. So there's a lot of significant resistance there. In the short term, if gold is able to push up to 2000 or a little bit above that, gold makes a weekly close above 1985. Maybe silver has enough juice to run to 24 and that first resistance level. I don't know. I'm just thinking off the top of my head. The other thing, one more thing on gold and silver, because the environment we're in, we're getting whiffs of deflation, concerns of deflation, and look, that happens. You're in a credit-based, debt-based economy. Every time there's a recession, and given the levels of debt that we've had, particularly in the last decade or two, every time you have a recession, there's going to be worries about deflation. So in a recessionary, deflationary environment, gold is going to outperform silver and the gold stocks, at least until you see gold clear a significant resistance level. And in this case, that's 2050 to 2100. So with all that said, we'll quickly finish up here with the stocks. GDX, I'm looking at these 200-day moving averages, and, all the, GDX in particular has held above the 200-day. Now it's flattening. Maybe it'll start sloping up. So GDX, if there's some more buying here, is potential for this run to continue to 33. GDXJ, right at resistance right now around 37.50. Next resistance level is at $40. And for Silge, it's at the first resistance level of 10.50. Then 11 is another resistance level. Maybe if there's more juice here in the short term, maybe that, will continue up to 11.50. That'd be the scenario where silver is able to move up to $24. Now, if you look at the thumbnail on the right, which is zoomed in, there's a lot of gaps there. So gaps signal an emotional market. And so just got to be careful in the short term, given all of those gaps. And, you look at the last 7, 8, 9 days, I think you have 4 different gaps in the minors. So, looking at GDX, 2850 is going to be the first support level for GDXJ. That's going to have support around 35, I would say. So, we'll see. I mean, that gap that looks like is on March 13th, are the miners going to fill that? I don't know. There's just some emotional trading here in the last week or two. With the big sell-offs, the nasty black candles, the gaps, then you have a huge, strong white candle. Look, the reality is you're going to see a lot of volatility, even more than normal, in these stocks. And, they could look, if gold's going to come back down to 1900 and correct some, the miners could come back down and retrace a lot of the recent gains. But, don't get me wrong. In the big picture, if and when we see gold take out 2050, 2100, then the miners are really going to shoot higher quickly. They're going to really outperform. And then at that point, the market could run away from you. And that's the risk of not having a position. So that's how we're looking for this week and a little bit beyond. Let me know what you think in the comments. Consider subscribing to thedailygold.com/premium. I think we're on the cusp here. We're getting really, really close to the start of what could be a historic bull market. Why will it be historic? I've explained that in past videos. Maybe I'll explain that in future videos. Thank you so much for tuning in. Talk to you guys soon.